What lot sizes should you be using? What lot sizes do you use in your trading? Leave your comments in the comments section below. Determining the appropriate lot size in Forex trading is crucial for managing risk and maximizing potential returns. The lot size you use should be carefully considered based on several factors, including your account size, risk tolerance, trading strategy, and the volatility of the currency pair you're trading. Firstly, your account size plays a significant role in determining the lot size. Larger accounts can typically handle larger lot sizes, but it's essential to balance this with proper risk management. A general guideline is to risk no more than 1–2% of your trading capital on a single trade. For instance, if your account balance is $10,000, risking 2% means you're prepared to risk up to $200 on any given trade. By the way, if you are looking for a reliable broker with very low deposit requirements and quick withdrawals, see the links in the description box below. Another key factor to consider is your risk tolerance. To manage risk effectively, you should use a formula that helps you calculate the appropriate lot size based on how much you're willing to lose on a trade. The distance between your entry point and your stop-loss level also impacts the lot size calculation. A larger stop-loss distance generally requires a smaller lot size to stay within your risk tolerance. Conversely, a smaller stop-loss distance might allow for a larger lot size. Additionally, the volatility of the currency pair you are trading can influence your lot size. More volatile pairs, which experience significant price fluctuations, might necessitate smaller lot sizes to mitigate risk. Understanding the volatility of different currency pairs and adjusting your lot size accordingly can help you manage risk more effectively. By taking into account these factors and using the formula to determine your lot size, you can better manage your risk and make informed trading decisions. Adjusting your lot size according to your account size, risk tolerance, and market conditions is essential for achieving a balanced and strategic approach to Forex trading.